Hello everybody, my name is Derek. It is Wednesday, the 27th of January 2010. This is an economic update. It's going to be a long one because there is a lot to discuss in this particular video. And the big thing that happened today was Treasury Secretary Timothy Geithner. He was speaking on Capitol Hill today regarding the AIG bailout package in 2008. AIG, of course, is an insurance company, and insurance is a form of gambling, and AIG, well, they lost apparently, and he wanted to clarify a bunch of different facts, and I wrote a bunch of them down, and I will go through them within this video. What I mentioned in a previous one is that there seems to be two different kinds of governments. There is the first kind, which is how some people would call different names, like the powers that be, New World Order, Illuminati, and there's a few other different ones along that venture. And then you've got different government groups, different senators, congressmen, town and city mayors. It seems as if that the majority of the second group, a lot of them actually want to do what they can to be in the best interest within us. At least that's what I'm hoping is the case, and at least that there's evidence for that to be the case, where the first level of government, which is the ones of the powers that be, it's almost a guessing game to figure out which people are in that group, and would Timothy Geithner be in that group? I think the chances are that there's a good chance for it. Nonetheless, he was razzled a bit today, or the people who were speaking on Capitol Hill gave him a little bit of a hard time, as they should. There was a vote on CNBC, Squawk on the Street. Apparently, over 3/4 of the people don't think he will be in this position next year, meaning they know that he's not a good person for the job. We have Ben Bernanke, of course, whom is looking to get reappointed into the Federal Reserve chairman. When you hear a lot of different analysts, they're going to be coming on stating, oh, he saved the situation. I mean, who's going to do better? And I mean, I could do better. I wouldn't take the job, but I also know that there are many thousands and thousands of other people who could do better. Also, as part of getting better is accessing truth and working within what reality has in store for us. So, anyway, moving on to this Capitol Hill situation. We had a lot of comments which were made by Mr. Geithner, and what CNBC did on their broadcast, what they put is a bunch of his quotes on the bottom of the screen. So I decided to write them all down. What I will do when I go through these quotes is I will start it with a quote and I will end it with unquote. I will end it at that point to comment on the different quotes. Okay. Quote. Action was required, and we did not have the luxury of time within this AIG situation. AIG's rescue was motivated slowly on the interest of the American people, unquote. So he's stating that it is on the interest of the 300 million individual American people, and if my memory serves me correct, and it's been a while, it's been over a year and a half now, that during that time, I think the majority of the people were stating that they didn't want these bailouts. Nonetheless, they were done anyway. Continuing on, quote, we did not act to protect individual institutions or foreign banks. Consequences of an AIG failure would have been catastrophic, unquote. Yeah, he mentioned this whole catastrophic thing, huge, and later on in this video I will talk more about catastrophe, if you will. Quote, government responded to a crisis in a coordinated way. In retrospect, our response to AIG was essential to success in combating crisis. If financial responsibility fee is approved, taxpayers will not pay 1 cent for the AIG rescue, unquote. I have no idea what this financial responsibility fee bill is all about. But to say that we're not paying for any of these type of regulations that is going on doesn't seem as if that could be correct. Yes, we may not pay through direct taxes, but inflation, that might be another way in which it could be paid for. Quote, financial system now in position to prove credit necessary for economic growth. Imprudent risk taken meant that AIG did not have capital to meet commitments. No one was adequately aware of what was going on at AIG. The Fed was the only station in town to rescue the financial system. Neither AIG management nor regulators understood magnitude of risks AIG had taken. Lehman bankruptcy added to urgency of AIG's situation. Failure to act would have immediate and real economic consequences, unquote. Okay, so failure to act would have brought different consequences, and you know what? That is correct. But I guess the opposite of failure is success. Therefore, success to act. Is that going to bring different types of consequences also? When you are printing fiat dollars out of thin air and doing these sort of practices, yeah, come on. Moving on, quote, AIG's failure would have threatened people's savings in a way Lehman's did not. Damage from AIG failure would have rapidly spread beyond Wall Street. There was no capacity for private consortium in helping AIG. At moment of AIG decision, we could not be certain that it would work. We put approximately tough conditions into AIG's rescue. Avoiding AIG credit rating downgrade was essential to sustaining its viability. Coercing AIG counterparties to accept concessions was not a viable option. In the end, we paid counterparties fair market value for their securities. The securities we have purchased have since generated significant cash flows, unquote. So the final one, security we have purchases have generated some significant cash flows. And as I've mentioned many times on this channel about the stock market, how it's comparable, or in fact how it is nothing more than a casino. And sometimes you're going to win, sometimes I guess you're going to lose. Moving on, quote, I withdrew from day-to-day involvement after nomination as Treasury Secretary. The broad strategy adopted to combat crisis has been temporarily effective. We've recovered 2/3 of TARP's earning $17 billion on those investments, unquote. There we go. They've made $17 billion in lending this money to different banks. Remember that when we borrow money ourselves, yes, we pay interest and that goes to debt. The same is true for banks. When they pay interest, even if it's at exceptionally low values, it goes to debt. And you know that the Federal Reserve, which is a private business trying to make money, is doing just that. Continuing on, quote, AIG situation is substantially improved over 6 and 12 months ago. Government still exposed to risk of substantial losses on AIG investments, unquote. So they're exposed to different risks because, like the stock market, sometimes you win, sometimes you lose. And when you're betting on AIG, there's a good chance that you are going to lose. And when Timothy Geithner says that doing nothing is catastrophic for the economy, I think to myself, is it really catastrophic when all the things that they are seeming to be doing, at least seems to me, is catastrophic? When we look at what an economy actually is, what an economy is, it's our goods and services, it's the producing of the goods and services, it's the using or the usage of these types of resources. When you have a strong economy, that means you have a heck of a lot of resources. And when the economy is not strong, then of course then there's not as many. Question is what is catastrophic for our economy? And in my views, what I see to be very catastrophic is intentionally making products that have less time with it, or they don't last as long. Because it seems to be insane to intentionally do this, but because of the monetary system, the way that it is designed, when they intentionally make products to break down after maybe 2 years or 3 or 4 years, when they can make a product that lasts for 10, 20, or 30 years, they are doing this because they realize that if they make one that serves them longer, well, that's going to hurt them over the longer term time frame, because they would rather sell a cheap product that's going to last for 3 years for, say, $300 than sell a good quality product that would last for 30 years for $600, because long-term profits are not there when that is the case. Another thing that is catastrophic for the economy is charging interest. That I've said this on dozens and dozens of different videos, as this increases the amount of overall debt within the situation. Thus, it'll help make businesses and people broke at exponential rates. Number 3, by adding and regulating, supporting companies like Monsanto, which is adding GMOs to our food, because part of the economics or economy is that the goods and services need to have quality to them. And when you are intentionally adding stuff to the food that is detrimental to human beings' health, I just don't really see how this is a positive feature for the economic situations. The next one, which is catastrophic to our economy, is not taking advantage of technology to do work for us. And some may argue to a different point, hey, I used to work in a factory in the 70s. This factory at that point had 2,000 people. Today they got 400 or 500 and they produce more because of technology. Well, that's it. They are only producing that much more and they still have 400 or 500 people. What I'm meaning by this is we've had a major technology boom over the last few decades. And with this boom, we have the opportunity to be able to do so much more for our economy, be able to create so much more, yet it seems as if they want to intentionally reduce the amount of technology because they are in direct competition in the workforce with the humans. And if they have robots doing all of this type of work, man, that just doesn't work because of the monetary system. And that is the biggest problem that we have, is the monetary system in itself. And another part of economics is supply and demand. What's the supply for food right now? You're hearing a lot of people talking about different food shortages that we are having, and for that matter, even how we are forecasting food shortages. Because what I find very interesting is you will have these government officials who forecast that the economy is going to do this and the economy is going to do that, and because they forecast something, they want to take action. You also heard how they forecasted swine flu to be such a terrible event, and because of this, the forecast state that we should have had an H1N1 vaccine. And there's nothing wrong. In fact, I think it's a good thing to have proper forecasts and then take actions upon them. So if the forecast is that we don't have as much food, shouldn't that mean we should make food? Okay, so let's continue on. What's the supply of workers that would be thus needed to create food? In so many different ways, whether it's building technology, whether it's physically actually planting seeds, or whatever process that is needed, the amount of workers is high. What's the supply of what's the supply of money in this world? Well, considering that they're printing it so easily, the answer is easy, and it's thus available. What's the demand for people wanting to have this type of asset? Once again, that is high. So to me, a successful recovery would include getting people to work, producing food. And obviously you want these foods without the GMOs and the crap that companies like Monsanto would put in the food. But just because I say that this is something that I think would help the recovery doesn't mean it's actually going to happen. And if anything, it's not. We have houses that are being foreclosed, and the reason why they're being foreclosed is because of the whole interest system. People can't pay their debts, and thus we have people who are becoming homeless when there's empty houses. In a sane world, the only way we should have homeless people is if we don't have enough houses. That should be the only sane way upon it. But the monetary system really isn't all that sane, at least it seems. We have a world where people are forced to go hungry, people are forced to go sick, and this is guaranteed based on the monetary principles that this world has. We do have systems in place for people to get food and shelter when they are extremely poor, but we also have systems in place for capitalism to allow many people to get extremely rich. We're talking about sport athletes, we're talking about many people within the media sector, many different CEOs, different bankers. You know what? There's so many different companies that are making lots of money. I mean, when you hear these earnings reports, this company made how many billions over a 3-month quarter? Yeah, a lot of people are making a lot of money too at the same point. Now, it's up to them if they want to help out those who are struggling. I'm sure that some of them are, but obviously not many, I don't think, would actually be doing that. Moving on to some current issues. The Commerce Department reports that house sales fell 7.6% month over month, and in 2009 the new home sales were down almost 23%. But consumer confidence this week rose a little bit, so I guess they all balance each other out. Obama is going to be speaking today on the State of the Union address. His goal is to get the economy, hit the confidence of voters, and his own presidency on solid footing. Good luck on that. And I said earlier in this video that to get jobs going, I gave an easy example: food. If there's food shortages, we have people in Haiti who are hungry. Heck, there's people in Africa and Guatemala and heck, you name it, many people. There's people hungry in America. So we definitely need food. And what he said was he will announce a jobs-heavy agenda, and I doubt you will see it for an increase in food production. Now, I'm saying that, basically. If it is, great. But if he comes through this whole type of agenda for more jobs, I mean, a lot of this has been stuff like census, different jobs, and a lot of it's going towards healthcare. And I'm not denying that we need to work within healthcare. I'm not supporting the healthcare bill. I'm supporting that we as humanitarians do what we can to make sure people get healed when they are sick. I mean, to me, that's just the noble, moral, and ethical thing to do. Nonetheless, if the unemployment rate stays above 8%, which it's going to, and we don't have this food production going on, good job in picking your president. And no, I don't mean good job in picking your president, because do you think John McCain would have been anything different? Yeah, one of the things I said in my previous video about American democracy was that in a real democracy, or if we were to try to find the best leader, then you would most likely see a screening process of many dozens and dozens, if not hundreds, of applicants that would actually have good credentials for the position, and we as humanitarians would have equal votes to decide on which one to choose. Of course, we're not in a society like that. Moving on now to gold and silver. They are both significantly lower from their December highs. Gold is down about 125 or about 10% from its high, where silver is down about 20% from its high. And there's no reason to complain about it going lower. And in fact, if you are still looking to be buying more physical gold or more physical silver, then this is what you want. You want to be able to be buying them at cheaper prices. But the reason why they are going lower is because we have the big money who is shorting gold and selling different positions. That's how everything trades. We got this futures, comics type of deal. Yeah, just add to the different type of Ponzi scheme that we have. We're going to finish this off with stocks. As I'm recording this video, it's 20 after 12 p.m. Eastern Time, which means that it's going to be very volatile, or was very volatile, depending on when you watch this, as the Fed FOMC minutes are on today after 2 o'clock Eastern Time, and when that happens, the stock market's just volatile as anything. But what I have noticed is we had some decent selling at the end of last week on Wednesday, Thursday, and Friday. And so far, after 2.5 days of trading thus far, the markets aren't really doing too much. They've lost 100 points on their gains on both Monday and Tuesday. And it's really showing signs of a bearish flag pattern. What that means is that it is looking towards going lower another leg. That doesn't necessarily mean that's going to be the case, because one of the things I've also been mentioning is that we have contradicting indicators towards the market, and what the daily chart is showing us is that all of these sell-offs that happen are guilty until proven innocent, because every single one has thus made new highs. Generally speaking, when you have these big sell-offs, what happens is at some point you're going to have some big moves. One of those days where you have a 200-point up day on the Dow, and that level doesn't get seen again for a while. That hasn't happened yet, but it still can happen next week. But of course, if you're trading, you want to use the rules that you have set in play for yourself, because if the stock markets crash, there is absolutely no reason why this should affect you that much. I find it very interesting that we live in a world where they want to give us insurance for almost everything. They want to make a lot of insurance mandatory. They don't publicly whatsoever talk that much about insuring your stock market investments, which is done primarily through options contracts. And when the stock market is very high, this is the time in which you would want to do such a thing. This way, if you were to be buying a bunch of contracts this week, and then you don't want to worry about selling your equity or 401k plan, if we go back to the March of 2009 lows, or even lower, then that should be a good thing, because you're going to be profiting on your insurance plays by putting different companies or stock codes like SPY and FAS and the Qs and almost any kind of stock market position, especially the ones that you have in place. Maybe if you're playing the stock market, you're playing what you can lose. Therefore, if it happens to tank, you don't care, because that was part of your diversified investment strategy. That's funny when you hear what the mainstream media talks about diversification. They say we want this kind of stock, and that kind of stock. It's sort of true, yeah, but stocks is just one form too along the way. And then if you're playing stocks, some smart strategy is to set up different areas for stop losses, whether you decide to use trend lines, Fibonacci scales, or whether you just want to pick out a number. Well, if the Dow goes below 9,000 or 9,500, I'm going to sell. Heck, that's a good strategy in my opinion. But like I say, the stock market is nothing more than a form of gambling. Some people may win, some people may lose. I still find it very interesting how they want to let us know that there's an economic recovery based on how the stock market is actually acting. Anyway, this has been a long video. I hope you got something out of this. Thank you for all of your comments within your video and the ratings, man. So amazing when I get a lot of great ratings within the video. Have yourself a magnificent week or weekend or whatever, whenever you're watching this video. Take care, everyone, and bye-bye.